I'm Caleb Silver, the editor-in-chief of Investopedia, and this is Taking Stock.
2 minutes to go here into the close, and don't call it a comeback, but the major market indexes significantly off their session lows with just 90 seconds or so to go left in the trading session. The S&P 500 now in negative territory, only 0.04% after being down a full percent a short time after the opening auction. And at this hour, with just a few minutes left to go here on Wall Street, the small caps holding on to a gain of 0.06%. The S&P 500 still trading underneath that 200-day moving average, that crucial technical level, however, for an 8th consecutive session, with all eyes on the self-imposed 8 p.m. deadline out of the White House tonight with regards to possible retaliatory strikes against Iran. All of that and so much more sets the stage for today's show. And speaking of today's show, welcome to it. You're watching Taking Stock. I'm your host, JD Durkin, mere moments away from the ringing of the iconic closing bell down here on the trading floor of the New York Stock Exchange. And just like that, the S&P 500 briefly, ever so slightly switching into positive territory. The team from Voya Cares, both here set to do the honors and ring the closing bell. They'll also join us here on the broadcast in just a bit. Energies, utilities, and healthcare, those are your strongest performing sectors for the day. Your S&P 500 laggards include materials, staples, and discretionary. Your Mag 7 tech stocks in mixed territory. A bit of an outperforming day for the team at Alphabet, while Tesla shares sliding in the session. The team from Voya here to ring the closing bell. We'll pick back up Taking Stock with Phil Rosen after this. And the team from Voya here to do the honors on this closing bell. Look at this. We had been red all day in the final seconds of the trading day ahead of the closing auction. The S&P 500 switching to positive territory. Final tail to tape. The S&P up 0.08%. The Dow 30 down 0.2. The New York Stock Exchange Composite Index down 0.01, essentially unchanged for the day. And the small caps, the outperformer, if you can call it that, up 0.2%. UNH, Chevron, JP Morgan, your strongest performing Dow 30 stocks on the day. We'll talk a lot more about UNH coming up in just a bit. Your Dow laggards, Nike, Walmart, and Home Depot. Let's bring in the one and only, our good friend Phil Rosen, who as of today, also on top of everything else, has a brand new title, Chief Market Strategist at ProCap Financial. My man, congratulations.
Thank you, JD, for having me.
Let's start right there. Talk to me first and foremost about your new role for people who see you here on the show basically every week, and what your main priorities will be with ProCap.
So to be clear, I'm still writing my opening bell newsletter every day. I'm still hosting my show, Full Signal. But on top of that now, I am running the ProCap Insights, which is our new agentic AI research firm, which to our understanding is the first agentic AI research firm on Wall Street. We are producing a ton of research with a bunch of proprietary data. We're doing a lot with a lot of AI agents and no employees. It's very exciting, and we are pretty much trying to push the pace on what is possible with AI and without much human employees.
Yeah, and that's a really exciting opportunity, I think, coming at a crucial time, because you and I have these conversations about potential AI industry disruption all the time. What most excites you for this new age world of agentic AI, and specifically the work you've been doing for quite some time already?
So we have been working with these AI models for quite a bit now, and they are so smart, so unbelievable. And to me at this point, I've been enlightened to just how smart these things are in the past few months. And I cannot imagine not leveraging superintelligence to do research, to do analysis of deep market data. And if you go through all the thousands of stock market data points that happen every single day, there's really no physical way a human alone could do that. So we are leveraging a bunch of different AI models to go through that for us and with us and produce really high quality research.
And, Phil, while I have you, I want to get your take on the CEO of JP Morgan Chase, Jamie Dimon, out with a big message yesterday. When Jamie Dimon speaks, investors across the major market indexes, our ears tend to perk up and we listen very closely. He tends to be a bit more skeptical sometimes, a little bit more bearish in his posturing than other leading CEOs. What stood out to you from Mr. Dimon's comments on the week?
Yeah, whenever he talks, I'm very much paying attention, and I felt like in his annual letter, he was actually talking to me. He highlighted a couple different points. He said AI is coming for probably every job in finance, and I was looking in the mirror as I'm working with my AI agents here, and I said, wow, I might be part of this very disruption that Jamie Dimon is talking about. This is part of the research product that we are building with ProCap Financial, and it's a very exciting time. I think Jamie Dimon is exactly right, though.
Yeah, I saw that as a matter of fact. At the top of the letter, it said, "Dear Phil Rosen and every other investor across Wall Street." While I have you, of course, investors, the American people, people around the world, we're eyeing this 8 o'clock deadline tonight out of the White House with regards to Iran. The president not pulling punches on social media. I will not repeat what he has written the last few days. What are you going to be looking for? Obviously, we'll get futures open at 6, and then we got to see. It could be a busy night for the White House tonight.
I think we better all be hoping that something happens before 8 o'clock that is either a postponement of even a postponement of peace talks. That would still be a good sign. Anything essentially to get away from what he was alluding to in his social media post, and we don't have to talk about it, but it's safe to say no one wants that.
Phil Rosen, where can people go if they want to see the latest work you're doing all the time for Opening Bell Daily, Full Signal, or your new role at ProCap Financial?
I do think, as much as I love my newsletter, the most exciting thing right now is on procapinsights.com. We're publishing a ton of research that is built by AI agents. It is smarter than anything I could come up with alone. I definitely think you should check it out.
One of our absolute favorite people in the game, day in and day out, the one and only Phil Rosen. Congratulations, very well deserved to you and Pomp and the team. Thank you for being here. We'll talk with you again soon. Skylar, grab your mic. Bobby, we'll swing around this way. Here's a few analyst calls that moved today's tape here on Wall Street. First up, Evercore ISI reiterating Apple has outperformed. They say they are sticking with the stock despite some slowing App Store growth concerns, setting a price target for AAPL at $3.30 a share. Next up, Citigroup upgrading Wingstop to buy from neutral. They say the current valuation, it's a pretty attractive entry point, and they encourage investors to buy the dip. Wingstop shares down about 30% so far year to date. And finally, B of A adding Spotify, Viking Holdings, and Microsoft, all three of those stocks, to its US 1 list of top conviction buy rated names. Spot and Microsoft are down so far year to date, but shares of Viking Holdings about flat since the start of 2026. Five Blue will swing around, take a look at two New York Stock Exchange notables. How about MSGE, that is Madison Square Garden Entertainment. Analysts from BTIG initiating coverage with a buy rating this morning. They say, hey, the current valuation, it's pretty compelling. Our price target sits at $70 a share. MSGE includes New York City-based assets like Radio City, the Beacon Theater, and of course, the world's most famous arena, Madison Square Garden. How about a look here at UNH? Bobby, shares up almost 10% on the day, the best Dow performer on this Tuesday after the government announced a surprise increase in Medicare Advantage payment rates. This is the 15th time in the last 52 weeks this stock has moved 5% or more in either direction. It really is a volatile name. Shares of UNH are down 6% from the start of 2026. And now in honor of Mrs. 2 lunar flyby, it's historic lunar flyby here the last 24 hours. Check out my recent one-on-one sit-down right here at the New York Stock Exchange with former NASA astronaut Charles Camarda. We talked all about the new space race, the culture at NASA, and much more. Take a look. The global space race is set to enter a new era as NASA prepares for Artemis 2, which will return humans to lunar orbit for the first time since the early 1970s. Charlie Camarda joins us now. He himself a former NASA astronaut and Space Shuttle Discovery mission specialist. Charlie, what an honor it is to talk with you. Thanks a lot for taking the time. Nice to have you here today.
Thanks for having me, JD.
So before we talk about kind of some of the delays and some of the challenges with regards to the Artemis 2 mission more specifically, talk to me about how you are viewing this latest iteration of NASA. Obviously, we had the years of, programs like Mercury into Apollo, into your years at the space shuttle, and now here we are at Artemis. What does Artemis represent to you, Charlie?
Well, I was a child during the first space race, and what that did for our economy, it really boosted our economy. It drove the kids into getting higher degrees in engineering, mathematics, and sciences, and things like that. And it was a great help for a boost for the country economically. I'm hoping the same thing happens with this new space race, right? But what I worry about is that if NASA doesn't change its culture back to the culture we had during the early Apollo years, we may lose this race.
What do you mean by culture? That's interesting. What do you feel that maybe NASA used to prioritize or do really well that maybe it's somewhat gotten away from?
Yeah, so I wrote a book about this, Mission Out of Control. Just last year it came out, it was published. And what it talks about in the first half of that book, because I flew right after the Columbia accident. And so what I realized was, yes, we had some technical problems which caused the accident, the foam coming off the external tank, striking the vehicle. But the real problem, the real root cause of both the Challenger and the Columbia accidents was the culture at NASA. Okay. And so what I write about in my book is that we lost what I call a research culture. During the early Apollo years, we had real research scientists coming from NACA, the National Advisory Committee for Aeronautics, where we had research labs and we were just doing applied research and we were making the aircraft country in the United States the best in the world. We took these really smart minds, these really sharp technical leaders and managers to develop Apollo. We've lost that. For the last 30, 40 years, NASA has not been investing in applied research. And so the technology we're seeing now that's flying on things like SLS is 1970s technology.
That's interesting to hear. I remember I have interviewed now former NASA Administrator Bill Nelson and others who were so excited at the introduction of the Space Launch System, or SLS, which is essentially the rocket delivery system for the Artemis missions. I wonder if you were to take me back, I think maybe a bit before your time. Obviously, we had the iconic Saturn V flying the Apollo missions. We had the Space Shuttle, as incredibly impressive a vehicle as that was that you flew in. How do you compare the technology, the ability of those rockets with what you've seen out of the SLS so far?
Well, the SLS is just a version of it's derived from the shuttle technology, right? So you have the external tank, you have the solid rocket motors. It's even using the same liquid engines, the SSMEs, the space shuttle main engines, right? And so it's a shuttle derivative. It doesn't have the winged vehicle. We went to a capsule because capsule is much safer than the winged vehicle than the space shuttle was. You have some abort conditions, but and it has to be lighter, and it has a different mission. It's going to the moon, right? So it's going to take people. It's going to take a crew to the moon, and so that technology, which is what's unbelievable, is really 1970s technology. The heat shield that's on the Orion capsule on SLS is basically a derivative from the Apollo heat shield. And a matter of fact, it's worse than the Apollo heat shield in my mind. The Apollo heat shield had what's called an ablative heat shield, which was Avcoat filled honeycomb. And this uses a block Avcoat design that had serious problems during Artemis 1.
Charlie Camarda, former NASA astronaut, STS 114, Space Shuttle Discovery Mission Specialist. It's really an honor to get to share a few minutes here on Cheddar with you. Ad Astra Charlie, thanks for joining us.
Thanks for the opportunity, JD.
Welcome back to the show. Maya Vojinovich joins us now. She is the CEO of Digital Assets at FG Nexus. She joins us via Zoom. Maya, it's really nice to have you join today's edition of Taking Stock. Now, your firm specializes in ETH accumulation and on-chain yield generation. ETH, of course, down almost 60% off of its August all-time highs. What does that mean for how you and the firm are positioned?
Yeah, very good question. And yeah, you're absolutely right. Nice to be here. Good afternoon. So yeah, look, I mean, ETH is trading around, what is it? 2000 now is 2100 this morning, 2000, it was close to 5000 last August, right? And nobody's ignoring that. But we do have to kind of separate the price from that adoption, right? We've seen BlackRock publish a report in January saying that over 65% of all tokenized real world assets globally sit on Ethereum. So JP Morgan launched its first tokenization money market fund on Ethereum in December as well, seeded it with 100 million of their own capital. Fidelity also launched one, right? So did Amundi in Europe and China Asset Management in Hong Kong. So things are happening, right? The price is down, and that has affected all the DATs, right? I do think that from the beginning, even before I stepped into this role, I had a thesis that DATs will have to turn into operating businesses. That was not very popular when we did this early last year, because everybody thought, no, you're just going to pick a token, you're going to accumulate it, and your NAV is just going to go through the roof. But I knew really early, being 15 years in crypto, that this is not going to be a case. And so this is what we're doing right now at FG Nexus. We've sold actually part of some of our Ethereum. We bought stock back. We have also done a stock split, right? That's all public information. And now we are actually doubling down on figuring out how we merge the digital asset with the kind of real world assets, and what does that mean for our operating business. And I think every serious DAT in the space has to be looking at that, right? Because if you're just in a business of taking a token, accumulating it, and hoping for the price to go up, I think you are doing a disservice to shareholders.
Yeah, it's interesting space and a timing. Over the last year, we're talking a lot more about digital asset treasuries because of the Michael Saylors, the Tom Lees of the world, people like yourself as well. Can you drill down a little bit more and talk to us about FGNX's overall treasury strategy? How do you define it, and in what ways has it had to evolve?
Yeah, absolutely. I mean, look, I think this is no secret to a lot of people listening. A lot of these things have happened, first of all, really, really fast. And they were a combination of really crypto native people such as myself, right, who's also been has an institutional background, but mostly then partnered with kind of TradFi partners, right? And so a lot of folks early days seeing MicroStrategy thought, wow, we're just going to have that MNAV. This is great. You can accumulate, you can start playing in that ecosystem, develop in the ecosystem, and price go up, right? But reality is that that's not the case. We started with that. However, though, we transitioned into staking ETH, into doing some other strategies with it as well. And now we are looking at really, how can we turn this into a real operating business? So really moving towards the real world assets, as we are still keeping this asset and deploying it into the ETH strategies.
Maya, unfortunately, that's all the time I have. Please come back and rejoin us. You're welcome to come back on Taking Stock and make the case anytime. Maya Vujinovic, CEO of Digital Assets at FG Nexus. Maya, thank you very much. All right, Bobby, let's spin around this way, bringing the latest headlines in the world of fintech, crypto, and AI. Look at this crowd just opened up for me. Thank you for that, everyone. I'm like, they have to move if we're going to walk. All right, thank you. All right, at this hour, the crypto majors are down in negative territory. That includes BTC, ETH, which we were just talking about with Maya, as well as Solana. Next up, U.S. Senator Bill Hagerty says the crypto structure bill, also known as the Clarity Act, expected to finally, at long last, enter the legislative process as soon as next week, as lawmakers work through final sticking points on Capitol Hill. And finally, Goldman Sachs warning laid-off tech workers that finding a new job could take a lot longer and come with lower pay. This comes as hiring slows and the industry resets after years of rapid growth. And now we are back with the CEO of Workplace Solutions at Voya right after a quick break. Much more Taking Stock coming up right after this. Welcome back to Taking Stock down here on the trading floor of the New York Stock Exchange. Jay Catison joins us now. He is the Chief Executive Officer of Workplace Solutions at Voya. Not just a great guest to talk to, also just rang the iconic closing bell. Thanks for being here.
JD, appreciate you having me.
What was this experience like for you and the team to be up there? I mean, business leaders around the world dream of doing this. You guys rocked it today.
Honestly, it was a lot of fun. We had a lot of energy up there, and we had our team down below here, so it was really fun today. Thanks.
Talk to me all about Voya Cares.
Sure.
After 10 years, what have you and the firm learned, and where do you still see some of the biggest gaps in terms of your end goals?
Well, if you think about our purpose, right, together we fight for everyone's opportunity for a brighter financial future, and that matters to us. So if you think a little bit about how we integrate our disability, if you think about Voya Cares, our disability inclusion into all of the experiences we have for our customers and our business, that kind of sits at the center. If you think about our designations today, we're having our advisors focus on getting that chartered special needs consultant title is going to help us think through how we bring long-term planning to both caregivers and those with disabilities. We take it serious and we embed it into our wealth management business.
Jay, we're talking 1 in 5 people with disabilities still reporting some form of discrimination in financial services. That's a big challenge for the industry to fix.
It is.
Where does it go from here to address that?
Well, listen, I think it ties to the benefits we provide at the workplace, right? If you think through our wealth management business, I see as that nexus. We've got over 20 million participants and employees that are looking for our financial guidance. A number of those are sitting with disabilities who are caregivers for those with disabilities. So how we bring that long-term planning need to the workplace for those that are caring for those with disabilities or those that have, we think that's living our purpose every day.
Can you talk to me about a tool like Able Accounts? What is still a bit misunderstood or under-understood about it, and what still needs to change?
I think the ease of access. As you think through the benefits of having and accessing an Able account, Rebecca Caccino and John Brett from our wealth management team who lead that business, they've talked about, if you go to Voya.com, they talk about the benefits of Able accounts and what it does for our constituents. What I can tell you is it matters. It provides protection and the right planning that we need for those that are living with disabilities.
How big of a role does caregiving play in today's workforce, and why is it still a bit maybe of an overlooked component of the overall equation?
Well, if you think about those that are living with disabilities, they typically need care. And those that are providing the care are burdened with both providing for their own financial needs as well as providing for others. And we think that that is a noble purpose, and we need to help them with the planning and advice necessary to both provide for their financial future, but also those that are living with disability to and through retirement.
You're 1 decade in. While I still have you as you take a look ahead, what do you most hope the next decade of Voya Cares and beyond looks like?
Well, I think there'll be some different people up top first to start, JD. I hope there is. We've got a great team. Listen, I think we live our purpose every day. If we do this really well, more and more people, more and more companies are going to take what Voya Cares is providing for those that are living with disabilities and caregivers. They're going to start creating solutions that matter and those that are helping people live a life of significance.
Jay Catison, really grateful for your time. This is really important stuff you and your colleagues are doing. Come back onto the show anytime. Really nice to have you.
Thanks, JD. I appreciate it, man.
Don't go anywhere. A lot more Taking Stock coming up live from the New York Stock Exchange right after this. Welcome back. Time now for a few headlines in the world of startups, raises, and rounds for your Tuesday afternoon. First up, industrial firm Madison Air looking to raise up to $2.2 billion in what could prove to be the largest U.S. industrial IPO in decades, right here at the New York Stock Exchange in just a few weeks. This comes as investor demand builds around data center and infrastructure plays. Next up, AI startup Anthropic deepening its partnerships with Google and Broadcom. Let's go this way to secure massive new compute power as the race for AI infrastructure heats up. We're going that way, Bobby. And finally, defense startup Ermeus raising $350 million to build hypersonic unmanned aircraft as investors flood into defense tech and the race for next-gen military speed intensifies. And now Money 2020's very own Scarlett Sieber is back with a whole new edition of Jargon Translator, where she puts complicated finance terminology into language that anyone can understand. Take a look.
Welcome back. I'm Scarlett Sieber from Money 2020, and this is Jargon Translator, where we explain why sometimes in finance, the scariest thing happens after the trade is done. You'd think once you hit trade, you're done. Spoiler alert, that's actually when the drama starts. So today's term is settlement risk. Settlement risk is a danger that one side of the transaction pays and the other side doesn't. It's a finance version of Venmoing someone for concert tickets and praying they actually send you the tickets. Those are a scary few moments there. In markets, millions of trades settle every day. Stocks, bonds, FX, derivatives. They're supposed to be an orderly process. I give you the asset, you give me the cash. But if something breaks, technology, timing, or a counterparty going dark, one party is left holding the bag. This gets especially spicy in foreign exchange, where trades settle in different time zones. One side might send their currency hours before the other side is even awake. Banks manage settlement risk with clearinghouses, collateral, netting agreements, and real-time settlement infrastructure. Because in finance, trust isn't a warm feeling, it's system architecture. Settlement risk. The reason back offices don't sleep and why "did the funds land" is the most stressful sentence in global finance. And that is your Jargon Translated. Have a term you want us to break down? Drop it in the comments below, and it might make the cut. Back over to you.
Tomorrow here on Wall Street, we will get remarks from Mary Daly, the president of the San Francisco Fed. A little bit of Fed speak. We'll get a sense on what voting members of the FOMC have on their bingo cards as they better evaluate the path forward on short-term interest rates. Also, speaking of the Fed, we will get the May FOMC meeting minutes. Excuse me, I think that's supposed to say March. I wrote it down in my notes. We get that crossing the wire at 2 o'clock tomorrow. Your final tale of the tape on this Tuesday, April 7th, the S&P 500 eking gains into positive territory, up 0.8%. The Dow down, the NYSE Composite Index down, and the small caps in positive territory. Thanks for watching today's very jam-packed edition of Taking Stock. Have a good one. We'll see you again tomorrow.